everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six markets and we formulate an attack method and a plan for tomorrow's trading. Now, today was a little bit of an oddball one. For most of the day, it really felt like the market was just sleeping. Now, if you were watching the index markets, you might think that I might be a little bit crazy in saying that, but all of the other markets, aside from a couple bumps here and there, were really, really slow. Now, the index markets, on the other hand, as soon as 9:30 hit, man, those things just dumped. And then towards the afternoon session, took it all back. So still pretty reminiscent of a range overall. A little bit of some oddball price action here and there. So like we always say, you got to play it a little bit safe in these markets of ours. Now before we jump in, make sure to swing on over to the website, slingshotfutures.com. Scroll down and click on the Join the Daily Outlook newsletter. That's going to add you to our email list that you'll know every single time one of these videos comes out. We talk about, obviously, the markets that we're looking at right now, but we also talk about different stocks and cryptocurrencies and investment options and all kinds of different stuff. So it's a great newsletter to get your hands on. Along with that, every single morning at the bottom of the page in the blog area, we have our live trader morning prep levels. These are posted every morning for the big six, and that's going to cover the major levels of support and resistance that we're going to be watching that day. And then, of course, in the afternoon session, we go over either a market psychology video or a trading kind of demonstration video where we go over either a trade of the day or the psychology of a specific market and rip it apart and learn as much as we can, as possible, at least, on these crazy markets of ours. Now, if you haven't done so already, make sure to go up and click on the live trading subscription and trial info. You can sign up for a one-day trial and see what we're all about. You can sit down and see what we do every single day. If you really enjoy it, you can always sign up for a weekly or monthly option. And of course, if you join as a full-fledged VIP member, you get the live trade room subscription for free as part of the package for life, and you never have to worry about spending anything ever again. Now, looking at the Bund, right out of the gate, the Bund had some massive bearishness. They kicked it off shortly before 4 o'clock, and just hammered to the downside. Now, after that big drop lower, they took all of it back, and they actually made a new high twice, and then slammed all the way back down again. Now, in typical range-bound fashion, we had a big drop lower. They broke a new low, they broke a couple new lows down here, and just like they did on the highs, they failed back the other way and popped right back up towards the top. Now, you can definitely feel the slight bullish sentiment to this, because while the buyers are breaking new highs of the day, the sellers are only able to break prior swings, but they're not able to break down to that low of day. And that really shows that the buyers have a slight edge, if any edge at all, so we're looking to buy more than we're looking to sell. Now, of course, we always want to try to stick with the trend, and if we zoom out, the overall trend is bearish. So really what we're looking at here is the attempted breakdown, going nice and strong to the downside, and getting weaker and weaker and weaker until we're likely more going to transition into a range. Now, that range hasn't proven itself yet, but we are starting to see the signs of a range beginning to form. So what I would really like to do is see the market cycle back up towards that 160.80 area, and then look for possible selling up here out of that range back to the downside. But it might be a couple days into next week before we actually see that kind of movement if tomorrow is slow. Now, looking at the overall bullish sentiment, we do have a nice bull channel working its way higher here, and it really stalled out at the end of the day. Looks like kind of a flag. Nice big flag pull to the upside. We flagged out and now looking for a possible breakout to the upside. That could definitely be the scenario to get to that range high further up there. Now, a couple areas that we have to deal with first. The first major level of resistance that buyers are going to have to break through is 160.51. If they can't break through that level, then we're going to have a really hard time getting that upward momentum. If the buyers do break through this level, it's very likely that we take a rush up to that monthly area of resistance at 64 and also 60-minute resistance at 65. So overall, likely we're going to be able to play this on both sides, buyers and sellers. But because we are cycling off of the anticipated range lows, I would rather look to be a buyer down here more than anything else. Over on the euro, for the most part, it had a lot of movement, but another one of those days where it really didn't accomplish a whole lot. We opened up right here, and we're going to be closing right there. Actually, one tick further down, right there. So our daily candle is this, right? This massive wick on the highs, massive wick on the lows, and just a gigantic doji, really ugly situation to be in for the euro, and not many traders are going to feel too enticed about doing anything with that kind of candle. So overall, I mean, we're in a range, right? We failed through the highs, we failed through the lows, and we're stuck smack in the middle of price action, and we really need to be careful around this area. You can also see inside of that larger range, we also have smaller ones that formed all over the place today. So with these ranges all over, we're looking for the breakouts to fail, and when they do succeed, it's likely just going to get halted into a range anyway, and then break down with that breakout initially, right? We had a nice little range up here, they broke down, they got stuck in a range, it broke down again, quickly snapped higher. We had a lot of range bound movement. They tried to get the breakout to the upside and have since failed. So right now, given that failure, it looks a little better to be a seller, but in all honesty, we're right in the middle of everything. So if you gave me a choice of buy, sell, or do nothing, I'm probably going to pick do nothing right now until we get into a slightly better area of interest. Now, a couple areas of interest that we can look for on the buy side are going to be at 87.55 as well as 86.55 to 60-ish. And then on the sell side, a little bit further up at that big 9,000 level again. And if it does go a little bit higher, it's going to be hard to ignore the amount of failure that came in up at the top here, around 90.70 up to 91.15. So those are going to be the areas that we're looking to trade, and right now we're smack in the middle of them. So we're looking to do a whole lot of nothing until we get some movement. Over on gold, beautiful bullish trend for most of the day. We had a little bit of an extreme rally to the upside here that quickly failed. They tried getting this nice bull channel going, and they tried getting more aggressive and completely fell apart on themselves. But notice one big thing that we have right now. We haven't reversed down to a new swing low. We haven't broken any major swing lows or anything like that. So even though we had a slight exhaustive move up on top here where the buyers just way overexerted themselves, they're still defending the pullback. And that could be a big sign of potential strength to the upside if they take this up again. Now, before that strength really shows up, we're going to have to get through a lot of areas of resistance. We have a falling area of resistance here. We have a channel top right here. They've got their work cut out for them. If they can break higher, though, we've got a really good chance to have one heck of a run to the upside if they can get it going. If they fail to get going, if you see something like this where it pops up, tries, fails, and then cycles its way back down, you're looking for a selling opportunity here to drive the market back down to more reasonable prices for the buyers to jump in on. But at the moment, we're still holding these pullbacks, and I have to give the buyers at least the benefit of the doubt of one more leg to the upside. Over on the bonds, once again, the bonds are pretty much a waste of time. We haven't really gone anywhere. They attempted to break out lower at around 9 o'clock and then quickly snapped right back in. The range low looks best at around 150.16. The highs are a little bit split. You've got 150.24, which looks pretty good, and then you also have 150.27 as sort of the extreme. So if you're in the middle of that area, probably better to sit on hands. But if we can start getting to the extremes of that through the highs or through the lows, definitely looking for some buying opportunities and selling opportunities. Now, again, we always want to try to go with the trend, and the trend is down. So because the trend is bearish, looking at this with kind of the mindset of I would rather sell high than buy low. Now, taking that zoomed out picture, we can see we have a wedge bottom in it that spiked down. All it managed to do was hit that wedge bottom and stop dead in its tracks. So because of that, we may end up finding a little bit of a wedge top somewhere around here, depending on where the market wants to turn around, and looking for that selling pressure above to drive the market back down again. So overall, range-bound bias for the most part, but with that sell edge still, and looking to sell up moves, assuming that they're going to fail. Over on crude, yeah, it didn't really do a whole lot. We had some nice overnight session movement. If you were trading the European session, you had some beautiful bullish momentum. But once we started digging into 6 and 7 o'clock in the morning, Eastern time, we kind of fell apart a little bit. We had a big pullback down, big rip up, big pullback down. We're not really going anywhere. They failed to get through the highs by much. The first time they closed above it, it immediately failed. When it came back, it failed again. Some pretty big clues that they're not likely going to be able to break out. And the exact same thing happened right here. They tried to get down through the lows. They closed outside of it. Twin reversal, closed right back up. And now we're looking for a possible retest of that level for an area of support. Now, along with that, I would honestly love to see the market come back down to that area at 47.63 to 54 and see if the buyers are still interested. Kind of like what happened back here. The sellers rejected it aggressively, and when it came back, they slammed it down again. The buyers rejected this aggressively, so what is their game plan if it comes back? So looking to be a buyer on a big dip down here between 63 and 54, and again trading it like a range, buying low, selling high, staying out of the middle with a slight edge to the upside given the strong bull trend that's in place at the moment. So looking for buying opportunities on crude, but preferably in a little bit more of a pullback. We're still kind of in the middle here, so slightly better pricing would be a good thing for buyers. And then finally the S&P. Again, 930 hit, and the S&P, along with the other index markets, just took an absolute dump all the way back down, getting hammered just back to back to back to back, selling all the way down. Now, with that amount of selling pressure, you're assuming that they're probably going to get a secondary leg, which they did, and that was a beautiful sell that we had in the trade room as well, right in that area. And then they quickly reversed, and a lot of that really can kind of be in part to the fact that, well, if we zoom out a little bit here, we can see where did that dip down go, and we might have to actually bump out to a longer time frame. Let's go to a 15-minute chart instead. Where did that big dip down go? Remember this area that we've been talking about for seemingly weeks now? Well, we tapped it and it immediately rejected. Now, along with that, that was also the potential wedge bottom. They blew through the lows and it failed. So what are we looking for now? Well, we have a massive failure at the bottom of the range and we're ripping higher already. So that gives us a clue that we're looking for a bullish move. One problem, we have to break through this area of resistance first. If we can break through this area, you're probably going to see it hold for a little bit, let it ping off of there, break out above it, come back, and then look to buy it for the upswing back to a new high. And we may be pushing record highs sooner than later at the rate that this is going on that rejection off the bottom today. Completely shut down the sell move this morning, and well, now we're looking at the highs again. So yeah, we might be winding the week out with a nice bull rally. Overall, strong bull trend. So we can't deny that overall, and it makes a lot of sense given the sentiment. So yeah, that big dip lower was immediately snapped right back up again off of monthly support as well. Looking for a bull rally. Now, in this case, we're stuck in an area of resistance, so I don't want to buy right here. What I would prefer to see is a little bit of a dip lower. See them dip down to 86 and a quarter, maybe down to 87, depending on how aggressive you want to be, and then look for a buying pressure move off of that level of support, noting the earlier double bottom, and they, arguably support there and here, and seeing what they want to do around this zone for a buying bounce right back up to finish that job. So, looking for the buy move, but I would prefer to get it at a better price if it will let me. So that's the outlook that we're taking a look at for tomorrow, being the 12th of the month, going into Friday. Looking at the economic calendar, we do have some stuff going on at least, which is always a good thing. We have at 2 o'clock tomorrow morning the German GDP, forecasted 0.6%. The previous was 0.4%. And then we go into the U.S. session. 8:30, we have three big pieces of news. We have the core CPI, we have the core retail sales, and the regular retail sales. 0.2% forecast, 0.5% forecast, and 0.6% forecast, respectively. So we've got some news that may keep the markets moving tomorrow, but it's only early morning news. Everything is done at 8:30, which may mean that a lot of traders are coming in, they're getting their trades off early, and they're calling it a day and heading out into the beautiful weather that hopefully everybody is having. So it might be an oddball one tomorrow. Once again, I can't wait until we get away from this and get some consistent movement rather than just humongous daily doji candles. But until that happens, all we have to do is make a plan, follow the plan, trade the rules, and you'll be A-okay. Until next time, we'll see y'all later.